EPF and ETF adjustment, you have to know how to recognize given salary, gross or net salary. Right? Think it has given example like this. Think of trial balance, debit side, credit side. Think values in thousand. This is the trial balance as at the accounting period end of the year 31st March 24. It has given salary trial balance. Think example salary equal 54,000. You have to know how to recognize given salary, gross or net salary. The normal double entry, cash account credit, salary account debit, as well as EPF contribution of employee, salary account debit, EPF payable account credit. Therefore, given salary, you have to know how to recognize gross or net. It is depend on EPF contribution of employee. Think effect for salary account EPF contribution of employee. If EPF contribution of employee has not been recorded, think EPF employee contribution. EPF contribution of employee is not recorded. Is not recorded in this situation, given salary, net salary. Therefore, how to calculate gross salary? Normal percentage EPF and ETF. EPF employee as well as employer. Employee 10%. This is legal requirements. And employer, employee in business equal 5%. So 15%. EPF. And ETF contribution of employer, only ETF employer. Think what ETF only give their contribution by the employer. Employee equal 5%. Think EPF contribution of employee is not recorded. Therefore, given salary, net salary. How to calculate gross salary? Think when calculate net salary, from gross salary deducted employee contribution 10%. Think from gross salary deducted EPF employee contribution, then ours is a net salary. Therefore, this is the way you have to get to net salary. Think this is a net salary equal 54,000. How to calculate gross salary? When calculate net salary, deducted only employee contribution 10%. It means if gross salary 100, deduct 10%, therefore net salary equal 90. Therefore, this value divided by 90 into 100, gross salary can be calculated. Therefore, think gross salary equal 54,000. That is net salary divided by 90 into 100. Therefore, think gross salary equals 60,000. Therefore, based on this value, should be calculate employee contribution. Based on gross salary. Right, now try to calculate EPF and ETF employer as well as employee contribution. Think 60,000 into 5% here. Therefore, value equal 3,000. And think employee contribution for EPF also 60,000 into 10%. Here 60,000 into 15%. Therefore, here value equal 6,000. Here value equal 9,000. If it is given net salary, think how to calculate gross salary. Therefore, think here salary equals 60,000. From that value, deduct employee contribution equals 6,000. How to calculate net salary? Recognize given salary net or gross. Based on gross salary, value should be calculated. If it is given net salary, think contribution of employee has not been recorded. Therefore, given salary net divided by 90 into 100, gross salary can be calculated. Now think how to record the ledger accounts. You have to prepare 5 ledger accounts. It is effect for salary. As well as EPF expense and EPF payable. 5 ledger accounts. Salary accounts, EPF expense accounts, EPF payable accounts, as well as ETF expense accounts and ETF payable. They have this one salary, balance also available, think salary accounts, EPF expense as well as EPF payable. And ETF expense accounts as well as ETF payable liability. Right, first one salary account balance available, 54,000 should be recorded as a balance brought forward. Those are available trial balance, cash account credit, salary account debited already. No need to prepare cash account now. It has recorded already, trial balance has given salary. Right, now think contribution of employee 6,000, effect for salary. Think double entry employee contribution, effect for salary, salary account debit as EPF payable. EPF payable account credit 6,000 as salary. Think double entry employee contribution. Salary account debit, EPF payable account credit. Then employer contribution 9,000. It is not part of salary, not effect for salary accounts. Another expense. Therefore, EPF expense account debit as EPF payable. Think EPF payable account credit as a EPF expense. Employer contribution. Think both contribution of employee and employer effect for EPF payable accounts. EPF payable. Employer contribution ETF 3,000. It is also not part of salary, cannot be deducted from salary, not effect for salary accounts. Another expense. Therefore, ETF expense account debit 3,000 as ETF payable and ETF payable account credit 3,000 as ETF expense. Think there are 5 marks. 3 expenses available: salary, EPF as well as ETF expense. Those values should be recorded under administration expense. But EPF payable and ETF payable, we have to pay to the central bank. Therefore, fund available in the central bank. Therefore, those are liability. If it has paid in cash to the central bank, cash account credit, payable account debit. Cash account credit, ETF payable account also debit. Think this value payable to the central bank. EPF and ETF fund maintained by the central bank. If it has not paid in cash, payable account balance available should be recorded under current liability. ETF payable also same way. But think if it has paid in cash to the central bank, cash account credit, ETF payable account debit, then there is no balance. ETF also same way. If it has paid in cash to the central bank, cash account credit, ETF payable account debit. If it has not paid, payable account balance available, that is a liability. Very important parts, you have to know how to recognize given salary net to gross. It is depend on employee contribution. Think salary account, if it has recorded correctly, salary account closing balance should be equal gross salary. Therefore, if employee contribution has been recorded, trial balance available gross salary. If employee contribution has not been recorded, trial balance available net salary. If it has given net salary divided by 90 into 100, gross salary can be calculated. If employee contribution 10%, divide by 90. If it is changed, think how to calculate gross salary. Value should be calculated based on gross salary. 3 expenses available and 2 liability. The expense should be recorded under administration expense as well as payable should be recorded under current liability. Payable account balance available if it is not paid in cash to the central bank. If it is not paid in cash to the central bank, EPF and ETF payable account also balance available.